more fun investing in the Philippines. Let's move on. The Philippines GDP. The gross domestic product measures the national income and output for a given country's economy. The gross domestic product is equal to the total expenditures for all final goods and services produced within the country in a stipulated period of time. The gross domestic product in Philippines was worth $272.02 billion in 2013. The gross domestic product value of Philippines represents 0.44% of the world economy. GDP in Philippines averaged $60.12 billion from 1960 until 2013, reaching an all-time high of $272.02 billion in 2013 and a record low of $4.40 billion in 1962. GDP in Philippines is reported by the World Bank. Philippines stock market. The Philippine Stock Exchange Composite Index is a major stock market index which tracks the performance of the most representative companies listed on the Philippine Stock Exchange. It is a free float capitalization weighted index. The PSEI has a base value of 2,922.21 as of September 30, 1994. The Philippines stock market decreased to 7,154.21 index points in October from 7,283.06 index points in September of 2014. Stock market in Philippines averaged 2,342.30 index points from 1986 until 2014, reaching an all-time high of 7,392.20 index points in May of 2013 and a record low of 129.52 index points in February of 1986. Compared to other countries, the Bursa Malaysia KLCI is a major stock market index which tracks the performance of 30 largest companies by full market capitalization listed on the main board of the Bursa Malaysia. It is a free float capitalization weighted stock market index. The KLCI index has a base value of 100 as of January 2, 1977. The Malaysia stock market decreased to 1,808.55 index points in October from 1,846.31 index points in September of 2014. Stock market in Malaysia averaged 752.86 index points from 1977 until 2014, reaching an all-time high of 1,887.07 index points in May of 2014 and a record low of 89.04 index points in April of 1977. Another company is the MICEX, is a major stock market index which tracks the performance of 30 largest and most liquid Russian companies from 10 main economy sectors listed on the Moscow Stock Exchange. It is a capitalization weighted composite index, has a base value of 100 as of September 22, 1997. The Russia stock market decreased to 1,374.19 index points in October from 1,411.07 index points in September of 2014. Stock market in Russia averaged 891.48 index points from 1997 until 2014. Reaching an all-time high of 1,969.91 index points in December of 2007 and the record low of 18.53 index points in October of 1990.
So now let's move on Philippines GDP annual growth rate. The gross domestic product in Philippines expanded 6.40% in the second quarter of 2014 over the same quarter of the previous year. GDP annual growth rate in Philippines averaged 5.02% from 2001 until 2014, reaching an all-time high of 8.90% in the second quarter of 2010 and a record low of 0.50% in the third quarter of 2009. economy grew an annual 6.4% in the second quarter of 2014, faster than a revised 5.6% expansion in the previous three-month period. The Philippine economy grew an annual 5.7% in the first quarter of 2014, is lower than a revised 6.3% increase in the previous 3 months. It is the slowest expansion in over 2 years, as the impact of last year's typhoon still weighs on the farm output. So now, let's move on to the next slide, which is Philippines inflation rate. The inflation rate in Philippines was recorded at 4.40% in September of 2014. Inflation rate in Philippines averaged 8.88% from 1958 until 2014, reaching an all-time high of 62.80% in September of 1984 and a record low of negative 2.10% in January of 1959. Philippines' annual inflation rate is lowered to 4.4% in September of 2014 from 4.9% in August, mainly due to lowering costs of food and non-alcoholic beverages. Utilities and transport core inflation was registered at 3.4% year-on-year, the same pace as the previous one. So, the Philippine stock market has done well so far this year. It should continue to do well in the future due to its resilient consumers, the government's ability and willingness to spend. So, investors should stay invested.